Hey guys, RC Peck here with Fearless Wealth. So good to have you here. And I want to start with a relative price chart. I want to be comparing to you, and it's already on the screen, silver to gold. So what you see on the screen is silver priced in gold. I know it sounds weird, but you can do that. And what's interesting about this is a couple things. So let me just annotate this a little bit here, and I apologize for the camera maybe jiggling during this period. But what I find interesting is, and I'm doing this as I talk to, is there's not necessarily one picture that someone sees, right? Or one way or one point of view or one solution. Like here's a price chart looking at silver priced in gold, and you can see that it has clearly fallen from 2011 till today. So let's just round it out and call it 10 years. And my brain clearly sees this huge peak here, this just blowout top here. And then when I look down here, there's this blowout bottom, but it's still in this trend. So there's no right way or wrong way, but what if I change the trend? Not to, prove a point, but what if that wasn't the trend? What if this was the real trend here? And it was something more like this, right? What if that was really what was going on? And when I say what really, but it's a different point of view. And now you can really see the blowout top and the blow off bottom much better. And the reason I bring this up is because I saw this. So I go onto Twitter once a week for about 30 minutes just to see what fun stuff's on. And this was a tweet by Vala Afshar. He goes, if you only see one solution to a problem, you don't understand the problem. And I just love this idea that there's many ways to solve a problem, right? There's many ways to come up with a solution. And it's fun to just go, okay, well, what are the different ways that I can look? Like, what are the different ways that I can look at silver price and gold? And when I do it this way, to me, it becomes so much clearer that this was the end of the gold and silver and precious metals bull market from 2000 to 2011, right? That 10 or 11 years. And it ended with just this absolute blast off where silver outperformed gold. And I believe what has already happened, that's past tense, silver had another blowout, but in this case, it totally had this down here, scared the heck out of everyone. And now I think it's only a matter of time until silver kind of regains its place of outperforming gold. Now, it has already been outperforming gold since almost near the bottom of the stock market this year in March. But what I want you to hear and see is that there's many different ways to solving a problem. Now, there's clearly bad ways, but this struck me as interesting to look at this relative price chart and just look at it over time and go, what is going on? And I believe what we've seen is this was a clean out here, and this year is absolutely the year. This isn't even a prediction. It's already happening. The first half of the year is already over. But as the year gains momentum, gold and silver are continuing to accelerate their move, which leads me to this. I'm going to just type this in right here, guys. Leads me to the US dollar. Not the best looking price chart at all. So to help out a little bit, let me just zoom out 20 years. And I just went, oops, that's not what I wanted to do. I want to zoom out. See, is something not working here? Just zoom out 20 years. So here it is. This is the US dollar. 57% of the weighting on the other side of this equation is the euro. But as you can see, I'm just looking at this period right here. The dollar's been going sideways. We had an oops right here, we had an oops right here, and we had an oops right here. So this is what I want to point out that is potentially happening and accelerating what's going on in the commodity world, especially the precious metal mining world, that we had this huge fake breakout here, couldn't sustain over the 100 mark, okay? And then when it finally came down, it came down really hard and dropped all the way down to about 88 during this time period. Now, you go to what's happened this year in 2020, we had this little oops blowout here, right? But now it's correcting hard, it's starting to break down, and it's very likely the dollar could fall down to this 88 and just test it. Because look, this 88 is an important price. If you look on the screen and just go back in time, you can see that the dollar, the US dollar index, has a relationship with that $89, $90 range going back clearly to 2004. So it would make sense for the dollar to go back down there and just test it out and be like, hey, are there buyers there? Are there buyers there? Because clearly buyers came in here. And if you look at the same US dollar index right here, clearly sellers came in and sold the dollar until it broke above that. And so that would be a logical place for the dollar wanting to go back down and test. So why am I going this way? Well, a lot of commodities on the planet are priced in dollars. And so a lot of them have been absolutely hurt. Coffee is one of them. Now, this is an actual tracking symbol. This is an ETN, not an ETF, but it's a tracking symbol of coffee. But one of the things I found really noticeable in coffee was it kept bouncing. And let me zoom in here because I don't think we need 7.5 years, but let me just zoom in here and show you what I'm seeing. It kept bouncing right here, kept bouncing off there. And then it broke down. And you see this kind of this false breakdown and the false breakout, which I showed you first in that silver gold relative price chart. Then I showed you it again in the US dollar. And now here it is in coffee and very likely in other commodities. And so this tracking symbol broke down. Clearly a lot of sellers came in, sold, but notice it didn't kept falling. It didn't keep falling. Buyers came in and now it's back up. And so that's a really bullish move here. And you can tell from the last price chart of coffee, that 7.5 year, that, look, guys, coffee's been falling for 7.5 years, but it's very likely coffee wants to get back up to here and it's going to want to test this price range right here. And if it tests it and buyers come in, this is another commodity. I say another because silver is screaming higher, gold is screaming higher. This is another commodity that could absolutely take off to the upside. So very interesting. So one thing I've been working on my side is to help get the story out of my training clients. Like, what was the story? What was going on in their lives coming in? And after getting trained, what was the story of their life coming out? Like, what had changed, and was it marked and different? And literally like pre-working and getting trained and post-working. And I've been just working on these 3 things, and I want to float them by you because I think they're really interesting. And it's something that's come up with Chung, who's helping me build the story around what's been going on with my training clients for over 2 decades. And so I just want to read this to you. And I know you should never, I'm breaking rules here, too much text, but let me just read this to you. And maybe even close your eyes as I read it to you. So this is a belief that a lot of people have. There's just so much to learn: the terms, the acronyms, the jargon, how to understand the economy, finding trusted data sources, following the best research, knowing the best stock names and sectors and niches and angles. I don't have the experience. Okay. People often believe that there's just so much to learn, remember, and recall. But actually, there's not. And if you just know the 99% to delete, then you get the growth and income you've always wanted with extreme consistency. So one thing that Chung is noticing with everyone who had taken my training over the last 2 decades is he was like, RC, you had to have told him or told her that in some way that there were these beliefs they had. Because if you don't overcome this, like if you go and going, look, there's just so much to learn, no one will ever take your training. And so we're starting to look at what beliefs had to have been shattered for them to go, wait, I can do this. So that's one of the first beliefs, that there's just so much to learn and remember and recall. And actually, that's wrong. The key is, and it's actually much easier, to just delete everything that doesn't work, right? But you have to have the belief that there's a better way. You have to have a belief that maybe I don't need to learn the acronyms and the terms. And so as I come across these and I learn them, I'm sharing them with you because I also find it very fascinating. Okay. And it's the same thing with investing, right? If you don't believe, right? If you don't have this belief system called like, it can be simple, you can get what you want. It doesn't matter what people put in front of you. It just doesn't matter, because your belief system is going to outmaneuver anything you learn, anything you read, anything someone tells you. And I remember years ago, I told Michelle Masters, who she was one of my teachers who taught me NLP. I said to her, you can't outrun your beliefs. You can't outrun your beliefs. Your beliefs are actually in front of you. So with that, let me jump over to just looking at GDX. And GDX is a precious metal mining ETF. And the reason I bring it up is because it could not break above this $29 to $31 range. Just couldn't do it. And it was under that for 7 years, had this huge, scary clean out here. And look, I was in GDX and I got cleaned out. But we immediately changed symbols and got right back in. And that's a sign of being detached, right? That's a sign of not caring or having a short memory. Because otherwise, if you don't know how to manage and notice and identify and place those feelings, understand what they're doing, then what happens is you miss all of this right here, right? You miss all of this. Now, here's the thing, that's up 31%. But it wants to, I believe GDX wants to get back to its 2011 highs, which are even off the chart a little bit. They're a little bit above here. And that means that it probably won't go in a straight line, but crazier things are going on this year. So it means GDX, I think, wants to get, it might take a little break right here, right in through here, there's some resistance, but I believe GDX wants to go up 50% more and test its old highs. And if that's true, that also means, I'm just going to put in gold. That also means gold's going to be a much higher price when that happens. Now, gold already is $18.48. This is 1 day old. I'm recording this on Wednesday. I believe it's the 22nd today. I'm going to look at my phone. It is. But really, the main thing that gold has done is broken above this sound barrier right here. Because if I take a daily price chart, I just make it weekly and say, what's the weekly high? And you see this 1800-ish that it broke above, and it clearly broke above that. And that's huge resistance right there. That's huge resistance right there. And then if I say, well, what's the monthly high? What's the highest closing price for gold on a monthly basis? And then you say, well, it clearly broke through that, right? And now look where it's at. It's above its highest monthly close. Now, the month has not closed out yet. It is July 22nd, so there's 8 calendar days left. But gold is, and this is priced in US dollars, gold is already, when you measure it on a weekly and a monthly, it's already at new lifetime highs. And you can see with gold had this huge barrier here that it had to get above right here. And so we have gold screaming higher in other currencies. And finally, the US dollar has fallen, which is making gold more expensive when you buy in dollars. And the point of me saying that to you is when things get moving, when something in motion stays in motion, it's going to take something of equal and opposite force to stop it. And the longer something is moving up and to the right, the longer it's going to be moving up and to the right. And this is something that the human brain has a very, very hard time managing. Now, if GDX is going up and a gold is moving up, that means, and hold on, gold is basically, I said GDX, I think, wants to go up 50% more to get to its high. Crazy thing about gold is it only needs to get up about 2% more. And this is the index. So this is just updated to the 21st. So we're getting close to lifetime highs. This is where things get kind of crazy. If that's true, silver is going to want to get back to its old lifetime high here of $49, which means silver is going to want to go up about 125% more to just catch up with gold. And then silver has a history of outpacing. So you could see silver go up another 125% this year, which I'm going really, 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 really rough math, but silver's up about 19% for the year. And if you go from when the world ended in March, silver as measured by, this is actually silver, is up 81%. So same thing, as silver breaks through these sound barriers and these resistance, more buyers are coming in, more buyers are coming in. But nothing matters unless your beliefs allow you to have them matter. So I saw this in my Twitter feed when I look at it on Sunday, and this is from Carl Quintanilla. So the percentage of NASDAQ components above their 200-day moving average is still less than 50%. This brings us back to one of our old sayings. Market tops are almost always preceded by breadth divergence, but breadth divergences don't always precede market tops. What I don't like about this, and not that he has to do this, but there's a lot being presupposed in that. And I will often bring up a price chart, and let me go get it here, or I have in the past. And let me just show the 200-day on the S&P 500. So this is the S&P and not the NASDAQ, but it's the same story. So I did the deep dive, and I wanted to know what's the minimum the percentage of stocks in the S&P need to be above the 200-day for it to matter. And for the S&P, as long as 20%, so that's 100 stocks out of 500, guys. As long as 100 stocks out of the S&P 500 are above their 200-day moving average, we're in blue skies, clear water, go for it. But if you don't get trained and you don't know how to filter information, then you're going to be stuck with this belief. You're going to be stuck with, I just don't have the time. I just don't have, there's just so much to learn. There's just so much to learn. Now, the second belief is time. I don't have the time. This is a belief system someone has that needs to be shattered in order for them to actually get the life and get the growth and get the income they want. So let me read this to you. I don't have the time. I don't have any more time to spend on this. I'm already spending nights and weekends reading newsletters, looking at research, learning strategies. Plus, I'm married, have kids, a job, a commute, and then I still have to sleep, work out, and eat. If I did have more time, it would be different, but I just don't. Right? You can hear the belief of that person, like, it's not my fault. Right? Now, they don't know their beliefs are saying learning how to be, getting trained how to be an amazing steward of your money, right, has nothing to do with time, but they believe it has to do with, I need more time. And then let me read this second paragraph. People often believe they need more time for better results, but actually, that's not true. And if you just notice how powerfully simple approaches take very little time, then you can get the growth and income you've always wanted with extreme clarity. Now, here's the thing, I'm going to come back to one more belief in a minute, but think about this. Doesn't it take less time to do something right than to do something wrong? And I get why people think it's based on time, because they've been taught that this whole thing is time, but that's a belief system they have. That's actually not true. It's actually not true. And especially as we get thrown so much information at our lives, it actually hurts our performance. So this tweet came from Charlie Biello, if I'm getting that right, Charlie. Over the past 20 years, IBM has bought back $140 billion of its stock. Its current market cap is $118 billion. Oh my God. Oh my God. This is just amazing. So we've got to go look at a price chart of IBM. So here's IBM. Let's look at it here. So this is a 10.5-year price chart. And I believe he said, I'm going from memory, Charlie said that they bought back 140 billion over 20 years and their market cap's 118 billion. Clearly what they should have done is just to put that 140 billion dollars into the tech sector, and then they would have a lot more. We could actually see how much more. But here's what's interesting. When you are trained to think with pictures, you don't end up buying crappy investments like IBM that end up hurting you, right? And I read this article that IBM is coming up with AI, and same with Google and Facebook and Amazon and Apple. It's just like, really, IBM being talked about in the same breath as those others? Like, and I pulled up a price chart of IBM. I'm like, they're lost. They're really, really lost in the woods. This is a horrible looking price chart. They have no idea what their business model is. They cannot figure out how to get up off the floor. And it just reminds me very much of GE. Now, GE looks much worse. Let me just pull up GE. But still, the point is, like, you're trained to think with pictures. What to do does not take time. And what to do going to my last belief system that people have to crack, does not take hard work. So the third belief system that I noticed and that Chung has realized for everyone who's changed their life in regards to managing their money, growing their money, being great stewards, getting control back is the following. So this is the current one. It's just too hard and would take too much effort right now and too much emotional bandwidth. And effort and emotional bandwidth to me are the same. I'm already feeling full. After all, I've read the books, taken the courses, been in the market for years. There's just been too many cycles of winning and losing, which that cycles of winning and losing is just so painful. People often believe consistent, great performance takes a lot of effort and hard work, but actually that's wrong. And if you just notice doing something right the first time always takes less effort, then you get control back over your money. And again, it goes back to these beliefs. If you believe there's a better way, then you continue and you'll look for it. If you don't believe, or if you believe it's based on time and learning and effort, then nothing's ever gonna change, right? But here's an example of just, again, showing you GE, showing you IBM, right? Now I showed you if IBM would have just put that 140 billion. Now, obviously they didn't put the 140 billion in at the beginning, but XLK is up 500%. And IBM during the same time period is clearly down. So, guys, growing your money well is not based on acronyms or jargon or special meetings. It's based on a ruthlessly simple approach that is very, very hard to break. So thanks, guys, for being in my world. This is RC Peck, and this is Fearless Wealth. And when you have questions, put them in the comments. If you did not see last week, I took a lot of people's comments and I did a whole video based on those comments. So I read every comment. I appreciate that your comments are clean, right? We're not here to attack each other. We can debate about things. The one thing I forgot to talk about last week, at the end of one person's comment, I think it was Nicholas K. I'm going from memory here. He ended the comment with, "Are you a speculator or an investor?" And it might have been, "Are you a speculator and a long-term investor?" And with that, I go back to, if you only see one solution to a problem, you don't understand the problem. And what I mean in this case specifically is, if you think you can either only be an A or a B or an up or a down, then that's a problem, because not only am I not a speculator or a long-term investor, I do something completely different. And that's because there's this just spectrum, right? On one end, there's speculation on the spectrum. On the other end, there's long-term investor. But those are just terms, and it doesn't necessarily mean the outcome of your performance. And so I find it very dangerous when someone's like, are you for Hillary or are you for Trump? It's like, I'm for the third choice. And the more people ask, well, what's the third choice? So the more people ask, I don't think that's the right question. What's a better question? I think it can be better for all of us. And this is a vlog, a conversation about investing, but how we believe life to be is how our money grows. So thanks, guys, for being in my world. I appreciate it. And I will talk to you next week. Okay, bye.